see it. Over the next half an hour, we've got a couple of important managements that we're going to be chatting with, and of course take you through all the F&O action as well. But Abhishek Kapoor, Group CEO of Puravankara, now joins in to take us through how the quarter's been for Puravankara. Abhishek, thanks for joining in this morning. Abhishek, start with what the quarter's been like and what are you expecting in the next quarter as well. Your pre-sales numbers up significantly YOY for FY25. What is the reason for that? Where are you seeing activity? Walk us through it.
Well, thank you for having me on the show. Last quarter has been fantastic for us. It has been highest ever quarter in terms of sales. We have done 1,950 plus crores of sales. We have handed over highest ever number of units, which is about 1,188 units. In terms of business, I think we are very excited on the overall performance for the last year. We have done 5,900 crores and we have collected 3,600 crores with an operating surplus of 513 crores. So we're pretty excited with what's going on. There's healthy cash and bank balance. We have got about 900 plus crores sitting out there. So we're now ready for deployment. In fact, we have already put out about 300 crores of land advances, and we will start seeing a lot more deal closures. Some of the announcements you already heard, which is in the redevelopment space in Mumbai, and there's a bunch more coming. So we're pretty excited about this year, last year's performance in the coming year for sure.
Wow, Abhishek, it's been a good quarter from the look of it. But as we look ahead into FY25 with the jump in pre-sales, and I believe you've secured some redevelopment rights as well for a few significant projects. What sort of visibility do we have on that? When do you see that impacting your cash flows, top line over the next few quarters?
Look, so with the current portfolio and 14 million square foot that we intend to add next year, we're looking at a total surplus of about 11,000 plus crores that will come in over the next 4 years. As far as the redevelopment space is concerned, we are just factoring in currently only the Lokhandwala project in the launch and the surplus. Of course, as we have signed up Pali Hill, in terms of being appointed as a preferred developer in Pali Hill, and we should be signing the DA shortly, that will definitely bring a lot of value. And of course, we are in advanced conversation with a bunch of other redevelopment projects in South Mumbai and western suburbs as well, where we are intending and hoping that we should be able to close some more transactions. So on an overall basis, I think these will start showing up in our cash flows starting this financial year, and of course incrementally in the next financial year, because Mumbai and Pune is definitely one big piece of our growth journey. Of course, now we are clear that we are looking at NCR, so now our endeavor will be to scale up our business in NCR as well.
Right, Abhishek, just wanted an understanding on conflicting reports that we're getting for the entire realty sector. You know, on one hand, we understand that there has been a significant drop in inventory. On the other hand, there is some expectation that there is a little bit of a saturation which is expected to reach towards the end of, well, perhaps 6 months down the line in terms of inventories, and that could actually lead to perhaps a higher number. What is your own reading, your own assessment of this situation at the moment?
Look, at this moment, you're right. The inventory is really down. So you're looking at about 10 months to 11 months of inventory across the country. Different micro markets will behave differently, and we need to be watchful and mindful of that. If there's a certain micro market that is oversupply, you may see plateauing of the prices, you may see some amount of plateauing of absorption levels. But having said that, I think the opportunity and tailwinds are huge for the large branded and organized player. So what is happening really is a consolidation, and I believe that, you know, us as a brand and other players who are strong, well-organized brands will continue to gain market share. And even if there is a little bit of a saturation, which I don't see it personally currently, I mean, I don't think that, you know, even if there is a demand catch-up and you assume that there will be a lot of inventory come in, I mean, there is a long journey for us to all get to that 18 to 24 months, which is normally an optimal level. So right now, I think there is a big catch-up going on. So I don't see that happening right now. In fact, I would assume that, you know, prices, especially for the branded strong players, will be going up somewhere on an average of about 8 to 9% across the country. So right now, I don't see that, you know, as an issue. But let's wait and watch. Nobody can really predict the future very well.
Take a quick word on your margins as well. We've seen some amount of volatility coming for the company, and as well as bottom line, because last quarter and the last year we had a little bit of a tax write back, and because of that the comparable numbers, at least on the bottom line, look lower. My question is, what is it they're going to look like going forward? If you got your word on margins going forward as well as your bottom line.
So I think margin is really related to how much revenue I'm able to recognize, which is dependent on how much possession I'm able to keep, right? So as an organization, our endeavor is to increase the possession. If you look at our numbers, our revenue growth has been about 60% last year versus this year. Now, bottom line is also a factor of certain expenses that you incur, which you have to take into account in the same year. Even if your gross margins are great and your bottom line is great, but there are expenses for growth. For example, we have done pre-sales of 5,900 crores, which is 90% above the previous year. So the sales and marketing expenses have gone up, and they have been taken into account in the bottom line from the previous sales, which is what we have recognized now. So that obviously is a booked cost, booked expense. And similarly, there is G&A. I mean, today we are expanding aggressively in the West. We are evaluating North. So there's a lot of G&A which is getting invested there. But the consequence of that is that you're adding huge amount of top line, bottom line, and value to the organization in this year and the future years. So I think that it's more to do with the aggressive growth journey that we are into, that this is reflecting on account of expenses that we are booking for that. Otherwise, we're very, very happy with the performance. We have handed over 3 million square foot. Next year's target is about 4 million square foot, while we have sold 7 in the last year. Now, again, this will happen because we will go beyond 7 million square foot next year. That's what we are working on, because we're launching 14 million square foot. So, these expenses keep getting booked, and therefore you see a squeeze in the bottom line, which is the PAT and PBT level. But having said that, we are very comfortable with where we are, and we believe that in times to come, over next 3 to 4 years' time, you will really start seeing, these numbers change on paper. And I think that's when possibly. But today, what we should watch for as a organization, which is what we really focused on, is one is a pre-sales number, clearly the collections number, operating surplus. For example, our operating surplus was about 513 crores, net operating surplus, right? Which is fantastic. It's gone up by about 400%, and we're sitting with healthy cash balance for deployment for the new acquisition, which will bring in a huge value. So I think right now, really the focus is on these areas, and I believe that this will eventually reflect on paper in the financials.
We'll leave it at that. Thank you so much for joining us and giving us that comprehensive explanation. Of course, that's the management of Puravankara telling us about what the nitty-gritties that go into accounting, and of course what we can expect going forward. The commentary remains positive, not just for the company but for the sector as a whole. But on that note, let's get in an F&O expert at the moment. Well, we have hit the 23,000 mark. Well, let's get in Sudeep Shah.